Hello, ladies and gentlemen. Welcome back to the X-Force Global channel. Thank you very much for joining me today in today's analysis. Hope you all had a fantastic weekend. Today, we're going to be talking about Dogecoin or Doge. It is one of the few coins that have been requested this week, so I'll make sure to give everyone a macro outlook on my view for the price action according to the wave theory. Again, I must cater to both the bulls and bears, so I hope my analysis does show a neutral approach to help build your own thesis on the bearish or bullish outcome. But nevertheless, I do share my probabilities and personal statement that is deemed not financial advice. Now, Dogecoin is a pretty tricky coin to count at the moment, but there are a few ways on how we can find evidence for a potential bottom. We have one bullish and bearish outcome for this specific video. But again, from a fundamental perspective, just based on probabilities at the current time of recording, I believe we are still in a bullish run. So that is why we're going to be focusing more on the bullish outcome for the time being. Again, as Solana or Sol in these meme coin ecosystem was the major move of this altcoin cycle. So we should still be on our best behavior in terms of respecting what the market signals are telling us. But for now, the signals are giving us what could be a bullish continuation in a late manner for this current cycle, as we are maybe in a possible 1-2 of some sort, as that is what most altcoins are currently in. But in the case we don't go for a run, then we know that this cycle was merely for only meme coins, and that is where my alternative bearish count will come in, which I'll share in this analysis. But starting off with the bullish option, it seems like Dogecoin did print a possible, and the keyword here is possible, a possible wave 4 triangle. If we're still working within a bull run, it is very unconventional for this wave 4 due to the placement and overall look, but due to the consolidation and unexpected price jump out of the apex of this triangle. The apex meaning the climax of the triangle based on a post-thrust explosion of a trend line. It mitigated what could have been a bearish move earlier this year. So the move out of this apex via the post-triangle thrust movement is what gave the first signal of a possible impulsive 5-wave move into what could be a wave 1, and now we are working on the possible retracement that is either a complete or near complete a wave 2 as a possible expanded flat, or a sharper wave 1-2 that is still being in the work. Now, if we look at our cycle degrees, this is the only way we can look at it. Now, one of the best evidence for these old coins is that they have price history dating all the way back in the early decade, right? So for this wave 1, 2, we have a very clean wave 3 of a cycle degree here. And that is why we're kind of forcing ourselves to say that this has to be a wave 4. Now, that isn't a bad thing due to that price history. We have a very clean 5-wave up extension for this wave 3. So in order to get this wave 4, again, we have to work in a series of 3s in order to create this triangle. So how do we get there? We have a leading diagonal into a possible wave A, a clean wave B, and a very clean wave 5 wave rather into a wave C of a possible beginning of a subwave A of a triangle. Now, if we zoom in how we can create this triangle, we can look at how we're creating a series of 3s for this triangle. We have a possible A, B, C for wave B, either as a WXY or some kind of diagonal into wave A, B, and then C into the subwave C, A, B, C into a wave D, and then we had some kind of truncation that didn't meet the trendline expectation that ended early, and this is what gave us that post-triangle thrust movement out of this trend line, out of this triangle into a possible wave 1, and we're looking for this either as an expanded flat that is now complete, and we're going to be looking for more possible upside due to the fact that we did hit the 618, not necessarily even deeper, as that 786 is another interesting zone that we would like to get in terms of demand. But that idea could come in the fact that we had a deeper wave 4 of this impulse that puts us wave 1 at the top, and we can be looking for a sharper retracement for a possible A, B, C that brings us back into the 786 or even possibly the 886 Fibonacci retracement. So either or works, and I believe that this is going to be the first round of demand in terms of where the major Fibonacci levels are. So it is currently being respected. We're still working above that 618 Fibonacci retracement. So this could be that expanded flat that could be completed, and we're looking for a possible move to the upside if the bullish momentum continues within this current cycle. Now, if we zoom out again, This idea of having this wave 4, as long as it doesn't go into the territory of the cycle wave 1 degree, it's going to be giving us still a validation that if the bearish scenario were to play out, that we could be looking for a deeper wave 4 in terms of a complex correction, meaning that we're looking for a wave Y that we've completed and we replace that triangle and we utilize this internal move here as a larger WXY instead of a possible triangle for a wave 4 bottom. Now both has its pros and cons, but like I said, this idea still is okay because we're still looking for a possible retracement that is going to be above that cycle degree wave 1 and not going into that price territory. Now, in the case it does move down, we don't want to be even hitting that 101 extension. So this is why that bearish idea could be turning into something very different, because we want to be looking for a wave W and a wave Y as an expectation again as a 1-to-1 ratio where wave Y will equal to the length of wave W. It doesn't have to hit that. It can hit the 618 just as likely. But again, this idea, if this were to move down, I believe that this is the only way that we can really be supported in terms of the overall bullish momentum. So in the short term, if this does turn into a 3-wave move into a wave W and a 3-wave move into a wave X, we're going to be expecting a 3-wave move down for wave Y that has been completing a possible 3-4 of that cycle, extending that larger consolidation, and then we're off to the races. But again, this does come at a risk where it could be another 80 to 90% run downside. But again, we already did have a 90% move. That is giving us a little bit more confirmation that the bullish idea could be still in play. Now, pulling up that bullish idea again, I do think that this is possible that we did bottom out for a wave 4 here, although it's a little bit unconventional, just due to the fact that we can find a little more evidence based on the logarithmic chart. So if the logarithmic chart is telling us that we're still looking for a possible move to the upside based on this idea here, where this could be a wave ABC to the bottom, this could be turning into something different, possibly this being the cycle wave 1, 2 being bottomed here, and now we're looking for the possible continuation. Now, if you have a long move of a sideways consolidation, we're looking at a few years of consolidating, and that is a long time in terms of crypto time that this can be a consolidation. So if we're on the logarithmic chart versus the linear chart, we're looking at the linear chart here, that this linear chart is showing us an idea of a consolidation. So if we pull up the logarithmic chart, it's showing us a little bit of a different picture, right? Because it's more showing the idea of exponential continuation. But on the idea of the linear chart, it's showing us a little bit of consolidation, just like we had over here. So if we continue this idea of consolidating on the linear chart, this is going to be giving us a little more confidence that we may be working to the upside. Because if we break back below this previous regional low, that is going to give us a little bit of a loss in terms of investor confidence. So I believe that this larger move to the upside is only going to be deemed as a possible continuation as a triangle that has completed and we broke out of that apex and we're looking for that wave 1, 2 either as completed or we're working for a deeper 1, 2, and we're going to be consolidating within this region where we have a protected low based on this move down that was 90%. So I do think that this bullish continuation is going to be happening. It just really depends on how the markets are going to be continuing and shifting in terms of the cash flow. And if we do move back into these old coins, if the market decides that meme coins is now going to be over and we move back into these coins of, like EOS, XRP, Litecoin, Bitcoin Cash, Dogecoin, and so forth that actually has price history, this could be giving us a fairly good look for a continuation that has a fairly strong risk-reward ratio due to the fact that we did already have a 90% plus move to the downside, and that is usually an indication that the market has bottomed. Now, the protected low is going to be very important. We do have that bearish option, and I think that is going to be giving us that clue on whether this bullish continuation is going to be happening or not. But I do believe that this 1-2 is going to be intact somehow, either as a sharper 1-2 or this possible 1-2 that is completed now, and we're going to be looking for higher upside. So that is my take on Dogecoin. I'm going to be sharing a few more altcoins this week, so please do stay tuned. If you're not already subscribed to my X-Force Discord membership, please do not hesitate to contact me. The link is in the description below. Or if you want more daily updates in a timely manner, please do follow me on X, or formerly known as Twitter, at X-Force Global. Thank you very much. I'll see you guys in the next video. Bye-bye.